If you're holding BBAI stock right now, you might want to pay very close attention, because what's happening behind the scenes could determine whether this stock becomes one of the biggest AI winners, or one of the most painful traps investors walk into this year. Just a few weeks ago, this stock dropped hard, catching a lot of people off guard, and while most investors think they understand why, the reality is far more complicated and, honestly, a lot more concerning, because this isn't just another AI stock riding hype. This sits right at the intersection of artificial intelligence, global conflict, defense spending, and a rapidly changing world where governments are pouring billions into technology that can predict, analyze, and control outcomes in real time. And that sounds like the perfect setup for explosive growth, right? That's exactly what makes this so dangerous. Because when a stock looks this perfectly positioned on the surface, that's usually when the biggest risks are hiding underneath. Now, here's where things start to get interesting and where most people are completely missing the bigger picture. On one side, you've got a company deeply connected to defense contracts, border security, and AI-powered systems that are becoming more essential by the day, especially with rising geopolitical tensions and global instability. In a world that feels more uncertain than ever, companies like this should, in theory, be thriving. But on the other side, there are signals subtle, but very real that suggest something isn't quite lining up the way it should. And when you start connecting those dots, a completely different story begins to emerge. A story that raises one critical question. Is this a hidden opportunity that smart money is quietly accumulating? Or is this a setup where retail investors end up holding the bag? And trust me, what I'm about to show you isn't just surface-level analysis or recycled headlines. There are specific moves happening right now, from institutional activity to insider decisions, to upcoming company actions that could have a direct impact on where this stock goes next. Some of these signals point toward massive long-term potential, while others suggest a risk that most investors don't even consider until it's too late. So before you make any decision on this stock, you need to see the full picture, because by the end of this video, you'll understand not only what's really going on with BBAI, but also why the next move could be much bigger than anyone expects, just maybe not in the direction most people are betting on. At first glance, BBAI looks like just another AI company trying to ride the wave of hype, but that assumption alone could cost investors big, because BigBear AI isn't built like the typical AI stocks you've been seeing everywhere lately. This company operates in a completely different arena, one where decisions aren't about ad clicks or chatbots, but about national security, defense operations, and high-stakes environments where mistakes can't happen. We're talking about systems designed to process massive amounts of data and turn them into real-time decisions for governments, military operations, logistics networks, and even border security. Now think about that for a second. In a world where global tensions are rising and uncertainty is becoming the norm, companies that can provide predictive intelligence instantly become incredibly valuable. And that's exactly the position BigBear AI is trying to dominate. They're not just selling software, they're selling decision-making power. And in industries like defense and security, that kind of capability doesn't just disappear overnight. But here's where things get interesting. While most investors are focused on flashy AI names making headlines, BigBear has quietly been building relationships in sectors that are expected to see massive government spending over the next decade. That alone sounds like a strong bullish case. And honestly, it is. But if everything looks this perfect on the surface, why hasn't the stock reflected that strength consistently? Why has it struggled to hold its gains, while other companies in similar spaces have exploded? That disconnect is where the real story begins. Because once you start digging deeper, you realize that this isn't just a simple growth story, it's a battle between massive potential and risks that could quietly undermine everything. Now let's talk about the first major warning, and it's something much bigger than just this one stock. Right now, global markets are being shaken by rising geopolitical tensions, and that uncertainty is spreading fast. News around potential military escalation, energy disruptions, and global instability is putting pressure on stocks across the board. And historically, when markets face this kind of fear, investors start pulling money out of riskier assets first. But here's the twist. Companies tied to defense and security like BigBear AI are supposed to benefit in times like this. As governments increase military spending and focus more on intelligence and surveillance systems, demand for these technologies should, in theory, skyrocket. So logically, a company like BBAI should be in a perfect position to surge. But that's not what we're seeing. Instead of consistently climbing, the stock has shown weakness and volatility, and that creates a very uncomfortable contradiction. On one hand, the macro environment is becoming more favorable for their business. On the other hand, the stock isn't behaving like a clear winner. And when you see that kind of disconnect, it forces you to ask a deeper question: what is the market seeing that most investors aren't? Because markets don't move randomly. If a stock with strong positioning isn't reacting the way it should, there's usually something happening beneath the surface. This is where a lot of retail investors get trapped. They focus only on the opportunity and ignore the warning signs. But in situations like this, the biggest losses often come from things that seem bullish at first glance. And what you're about to see next might explain exactly why the stock isn't moving the way many expected. Here's where the story takes a turn that doesn't quite make sense at first. That's exactly why it matters. Despite the stock's inconsistent performance, institutional investors have been quietly increasing their positions. We're talking about large funds and major players adding millions of shares over recent months. And when that kind of money starts flowing into a company, it's usually not random. These institutions have access to deeper research, better data, and long-term strategies that retail investors simply don't see. So naturally, this creates a powerful narrative. If smart money is buying, shouldn't that be a bullish signal? In many cases, yes. But here's where it gets complicated. Because while institutions are accumulating shares, the stock itself hasn't shown the kind of sustained momentum you'd expect from that level of confidence. And that disconnect raises a very important question: are they positioning early for something big, or are they preparing for a completely different outcome? Now add another layer to this. There's a major global event approaching that could significantly impact demand for BigBear's technology, the 2026 World Cup. This isn't just about sports. It's about massive international travel, increased security risks, and a surge in demand for advanced screening, surveillance, and biometric systems. Exactly the kind of solutions BigBear AI is developing. So, on the surface, everything seems to be lining up perfectly. Institutional buying, global catalysts, expanding use cases at all points toward long-term growth. But if that's the case, why does it still feel like something is missing? Why does the stock still hesitate? Because just as the bullish case starts to build momentum, a red flag appears that changes the entire perspective. Just when things start to look convincingly bullish, something happens that forces you to pause, and that's insider selling. Recently, one of the company's directors sold a significant number of shares. Now, on its own, insider selling doesn't always mean something is wrong. Executives sell shares for many reasons: personal finances, diversification, or timing. But context matters. Timing matters. And in this case, the timing raises questions. Because this sale didn't happen in isolation. It came at a moment when the company is gaining attention, when institutional buying is increasing, and when major catalysts appear to be on the horizon. And that's what makes it stand out. When insiders start reducing their positions during potentially strong periods, it introduces doubt. Not panic, but doubt. And in the stock market, doubt is powerful. It creates hesitation. It slows momentum. And sometimes, it signals that there's more happening behind the scenes than what's being publicly discussed. But here's the key part. Most people overlook this sale was only a portion of the insider's holdings, which means it's not a complete exit. And that's what makes it even more confusing. If the outlook is strong, why sell anything at all? But if there's concern, why not sell more? This is where the situation becomes less clear and more strategic. Because insider actions often don't tell you everything, but they give you clues. And when you combine those clues with what's happening next, you start to see a much bigger risk forming. Because the real issue here isn't just insider selling. That's only the surface. The real concern is something that could directly impact every shareholder. And most investors don't realize it until it's too late. This is where things shift from subtle warning signs to a very real and measurable risk: share dilution. The company is moving toward increasing its authorized shares significantly, potentially doubling the total number available. And while that might sound like a technical detail, the impact on investors can be massive. Because when a company increases its share count, it creates the ability to issue more shares into the market. And when that happens, existing shareholders can see their ownership percentage shrink. In simple terms, even if you own the same number of shares, your piece of the company becomes smaller, and that often puts downward pressure on the stock price. Now here's where it gets complicated again. Companies don't do this for no reason. Increasing share authorization can give them flexibilities to raise capital, fund growth, or strengthen their financial position. And in some cases, that can actually support long-term expansion. But the timing of this move is what raises concern. Because while the company has improved certain aspects of its financial position, it's still dealing with declining revenue and ongoing losses. That creates a situation where raising capital becomes a real possibility. And if that happens through share issuance, investors could feel the impact quickly. So now you're looking at two competing forces. On one side, you have a company positioned in a high-growth, high-demand industry. On the other side, you have financial pressure that could lead to dilution. And this is exactly where many investors get caught off guard. They focus on the story, the potential, the future, but underestimate the mechanics that affect stock price in the short term. And just when this risk becomes clear, there's one final piece of the puzzle that keeps investors interested despite everything. Despite all the risks, all the uncertainty, and all the warning signs, there's still a very strong reason why investors haven't walked away from this stock, and it comes down to one key idea: real-world adoption. BigBear AI is no longer just focused on defense contracts. It's expanding into civilian infrastructure, particularly airports and border control systems. And this shift could be a game changer, because unlike one-time government contracts, airport and biometric systems create recurring demand. Every traveler, every checkpoint, every system upgrade becomes part of a long-term ecosystem. And as global travel continues to grow, especially with major events like the World Cup, this demand could increase significantly. At the same time, governments are investing heavily in modernizing border security and transportation systems. There's a clear shift happening from manual processes to automated AI-driven solutions. And companies that establish themselves early in this space could benefit for years to come. So now you're looking at a completely different perspective. This isn't just a speculative AI play. It's a company trying to position itself at the center of a long-term infrastructure shift. And if it succeeds, the upside could be substantial. But and this is the critical part: it still hasn't proven that it can scale this business profitably. That's the missing piece. Until the company shows consistent revenue growth and sustainable profits, the risk remains. So now the question becomes very simple, but incredibly important. Are you looking at a company that's early in a massive growth cycle, or one that's struggling to turn potential into reality? Because the answer to that question will determine everything that happens next. So here's the reality of the situation, and this is where everything comes together. BBAI isn't a simple yes or no stock. It's sitting right in the middle of two powerful forces pulling in opposite directions. On one side, you've got massive long-term defense, border security, global travel expansional industries that are only expected to grow from here. If the company executes properly, if those contracts scale, and if they can turn adoption into real, consistent revenue, then this could be one of those earlier stage plays that investors look back on and wish they didn't ignore. But on the other side, you've got risks that are just as real and much more immediate. The possibility of dilution, inconsistent financial performance, insider activity that raises questions, and a stock that hasn't fully responded even when conditions seem favorable. And that combination creates uncertainty. The kind of uncertainty that can either shake out weak investors or trap them completely. And this is exactly why most people get this wrong. They either go all in on the hype and ignore the risks, or they focus only on the risks and miss the opportunity. But the truth usually sits somewhere in between. The smartest investors don't just ask, is this a good company? They ask, what's more likely to happen next? Because, make no mistake, this stock will move. The only question is whether it moves because the fundamentals finally catch up to the story, or because the risks start playing out faster than expected. And by the time that becomes obvious to everyone, the biggest part of the move will already be gone. So now I want to hear from you. Are you buying BBAI, holding it, or staying completely out? Drop your thoughts in the comments. I read every single one. And if you want more breakdowns, where we cut through the hype and actually look at what's going on beneath the surface, make sure you're subscribed, because the next opportunity or warning might come when most people aren't paying attention.